Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Hey traders, over the last 15 years, we've tested 64 different trading courses and we have put the most powerful systems and trading techniques that we've discovered in this brand new trading course. And for a limited time, I'm giving away free access. So go to johnsfreegift.com. That's johnsfreegift.com or click on the very first link in the description to get free access to this brand new trading course right now. Hey traders, in this video I want to teach you about the channel and about when you identify a channel, how you can use the channel to use what I call a channel projector target, or find a target from the actual channel itself. So that's what I'm going to be talking about right now in this video here, just to really help you. So if you find a channel in the markets, so for example, if you look at the transports right now, as I speak right now in the transports, let's go back to the weekly chart. And as you can see on the transports, right, see how we've actually got this sort of resistance up the top here, and we've got the support down the bottom here through there. So what you want to do is you want to find the channel itself, right? You want to find the resistance to the support to the resistance, and you want to find as many touches as possible within that channel. So as you can see, right, we're in this channel here right now. Now the question is, wherever it breaks, we want to get a good idea of where it's likely to run to once it does break. So let's just say, for example, the market does hold here and we start to break down past this 175. Then where is it likely to go to? What you want to do is you want to measure from the high side of this resistance level. Then you want to bring it down to the bottom here, okay? Down to the bottom. And when you do that, you want to then project that down through to there. So you found the top to the bottom, and then you want to draw a line through there. And if I bring back over time, you'll be able to see that it's probably around about this level here is where it's likely to run to. Now, if it does break up, then what you do is do the exact same thing, but you project it up through there. Right, and then what you do is you project that up through to there, which is 220, and that's where it's likely to get to. Okay, so we go back to the daily chart now, and you can see that that's what's happening through there. Back to the weekly chart, and so that's how once you identify a channel, and you identify it's been channeling for quite some time sideways, that's how you find out the targets of where it breaks. Once it does break, where is it likely to run to? Now, this is not all the time. There's two different scenarios with a channel breakout. Firstly, it could be a false breakout. You've got to be careful of that, which means it breaks down and then gets back to the upside and then gets back above it. That's when you know you got a false breakout, because it'll drop down, it'll go sideways for a bit, and then it'll get back above that 175 level. So that's what we're looking at through there. Or we break up and we go sideways and then we break back down. So here's the thing, wherever it breaks out, if it is a false breakout, so let's just say, for example, the market breaks down and it's a false breakout, we get back above that's 175. If that's the case, then we're likely to run back to the top of the channel here. Okay. If it's not a false breakout and we don't get back above there and we just break down, then we're likely to head back down to 155. Same for the reversal. If we do get a break to the upside and then we go sideways and then break back down, back below the 200 level, guess what? Now we're likely to run back to the other side of the channel. If we don't, if the market does break and it doesn't break back down, then we're likely to head back up to 220. Make sense? So whenever you're looking at the markets, whenever you identify these channels in the markets, be careful and watch out for those, because I shouldn't say be careful, but this is how you can see, okay, when a channel, once we break out, this is where it's likely to go to. Now remember guys, when trading the markets, it's not like one day. This could happen over a few weeks. This could take a month for that to happen. Okay.